Hello traders, how are you doing? I hope you are doing well. Please, I want to encourage you to make sure that you have proper understanding of the concepts discussed so far. Please, if you have any question, let me know. Make sure you understand the concepts, like I said, that we have discussed. Then our psychology class, like I keep repeating, is very important. If you want to be consistently profitable in a much shorter period, you need to understand deeply trading psychology, because trading psychology is actually diametrically opposed to that of the human psychology. So the earlier you start understanding trading psychology and applying it to your trading, the better, because it takes time to really master. So in this video, we are going to be looking at trading ranges, a bit of trading ranges, a bit of top-down analysis, and a bit of internal and external structures, just to make us understand more perfectly what market structure is all about. So let's start with the trading range. If we, for instance, we are in a bearish market and we have this break of structure, okay, we can see that we have formed a new trading range after we have this break. The trading range is actually formed by the lower high, or the high that took at this low, and the lower low that is formed after you start having what? A pullback, an evidence of pullback. Okay, so we have this trading range. Why is it important to label that as our trading range? What's the significance of that? Okay, this is what I mean by our trading range. Okay, this is the range. What it means is that your focus is going to be within this range. Okay, that's where your focus is going to be. All right, so since we are in a bearish market, what you are hoping to see is a break of this low. Okay, so for instance, the market continued, and you have a break. Once you have a break, we now have what? A new trading range, which is this. So you start focusing on this range. Once again, the trading range in a downtrend is formed by the high that took out the low and the lower low that is formed after evidence of what? A pullback. Okay, now if we look at the case of an uptrend, we have price breaks this high, okay, and we started seeing this evidence of pullback, then we can say that we have a trading range here. We have a new trading range. Okay, all right, so you now wait, expect that the market will break this high, this new high, and we start having evidence of pullback. Then we have a new trading range, okay, of focus. We now start focusing on this. I hope you understand what we mean by trading range. Okay, so we start looking at, unless for instance we have a break For instance, we have a break of this high. We don't mark our structures. Okay, you wait to see whether the high or the low is broken. If the high is broken, sorry about that, it means that we want to continue the bullish move. But if the opposite is the case and the low is broken, most likely we want to change to a downtrend in this scenario. So I hope you understand what we mean by that. Okay, so sorry about this. What's wrong with me? Sorry. Alright, so delete. Now the next thing we're going to be looking at is top-down analysis. What is top-down analysis? For example, if you are in a downtrend on the 4-hour time frame, just like this, okay, but on the 1 hour, the market is doing this on the 1 hour, okay, market is doing something like this on the 1 hour. Let's change this to maybe red. Okay, you can see it's quite easy. Okay, now the major structure, this way we'll talk about internal and external structure. Remember, once again, the green is a 4-hour, the red is a 1 hour. Okay, I think this is clear enough. This market is down. Okay, it's going down, but if you do top-down analysis, you already know, for instance, that the market is going down, and in that case, it's always best to buy based on the higher time frame direction. The market is going down. Okay, now whenever you see, maybe you are on the 1 hour time frame, okay, whenever you see this uptrend, any uptrend like this, just understand that it is a retracement of the 4 hour. So you will not trust this up move. Okay, any up move you see, any bullish trend you see here on the 1 hour is actually a retracement, telling you that it will soon end. Okay, so because you have an idea of what is happening on the 4 hour, you be very careful on what to do on the 1 hour. Okay, so in that case, the best kind of trades we'll be taking is to look for the break of this change of character here. Okay, bearish change of character. So we have a change of character here. If you take this trade after this change of character, you want price to come down, and you take this trade like this, your buy trades would not be advisable, because price can easily come back and take you out. Okay, when you are on, or when the market is in a downtrend, it's now advisable to buy. You may get some profits, but you must understand that you must get out of here, get out of the trade around this position. If not, it's going to stop you out. Why? Because the momentum is down. So when the momentum is down, it is best for you to be selling, and when the momentum is up, it is advisable for you to buy. So let's take a selling scenario in this case. You see what I mean? After this break, don't worry about this, my strategy that you're going to learn very soon. After this break, you can say, okay, let us take a trade here. For instance, take a trade, stop loss above here. And you can see that you can capture well enough good trades if you trade like this. Okay, because even if you have the pullback, if you even have the pullback, it will not get to your stop loss, and by so doing you capture a nice trade. If it's not clear, don't worry, we have a full course, a full chapter on top-down analysis. So we have looked at internal and external structure. Now if you have a downtrend this way, okay, you can only continue to have a downtrend once we break this low. Okay, once we break this low. Okay, if for instance we fail to break this low, start having something like this, start having something like this, not only are we failing to break the low, eventually we have the break of the low, so at a point, not only were we failing to break the low, but we also couldn't break the high. In that case, we say that we are in a ranging market. The market is ranging or consolidating. Okay, what's the significance? When the market is consolidating, please, it's advisable to stay away from the market. Okay, stay away from this market. And how are you going to mark it? The mapping is going to be like this. Let me toggle out, stay in drawing mode. We have this as the high. This is too large. We'll make it 14. We'll make it capital letter. Sorry, high, low, lower high, make this green, lower high, or make it black. Okay, lower high, lower low, now are we going to call this lower high? No, because we have not been able to create, as at this point in time, this move have not been able to break this low to form a new lower low. It is when we have formed a new lower low that we can now mark here as a lower high. So what you're going to mark now is this. Sorry, you're going to mark this lower high. Why? Because eventually we have a break of this low here. Okay, to form what? A new lower low, and after that we have this lower high that is here. Then we have this lower low, we have this lower high, then we have this lower low. So you can see that I did not mark anything here. Please, it doesn't really make sense to mark anything here because it is still in a range. You only wait until this lower low is broken or traded through before you can confirm that this is a lower high. Okay, because there could be a scenario of a reversal, right? So that's just an example of a downtrend. There could be this kind of scenario. Let's say we are still on a downtrend. We're still looking at the downtrend. Oh man. So we have something like this. Market is not breaking the lows, it's not breaking the highs. Sometimes it can be very complex, you may not even know it. Can just be too complex, but don't worry. and eventually we have this. Started having something like this. Okay. All right. So in this case, the market was in a downtrend, and the latest range is this. This is our range. Okay, like we already defined after the break. The latest one is our range. Okay, something like this. Okay, you see that price, how did we get the range? Price was not able to break below this low and even this high. So at this point in time, the market is ranging. Do not do anything here. Okay, here, do not do anything here. Just leave the market alone. Okay, that's one of the ways you can improve your trading. So for example, we have this. If we're going to map it, we have this high, this high, this low, this lower high, this lower low, sorry, so, see, because of this stay drawing mode. Alright, so as you can see, the market was able to break this low, yes, but the market was not able to break this low. So we are now in a range. It wasn't able to break this low and was not even able to break this high. This is a lower high. What am I doing? This is a lower high because it led to the break of this low. Okay, now we are in a range. We're in a range. Okay, we're in a range until we have the break of this high, and now we have what? We have a higher high. A higher high. A higher high because this high is higher than this high, and then we can now look for the lowest low here and call it what? This is actually a lower low. This is a lower low. This is a lower low. Okay, sorry, I'm not. This is a lower low. Alright, so this is the range. So right now, this lower low led to this break. So our next higher low now, this low will not be higher than this. Our higher low is going to be this. Okay, all right. Higher low. Why? Because it's a low that took out this high. This is a higher low. Okay, and this low actually took out this high. Okay, we have another, sorry about this, we have another higher low, and we have a higher high, and then we have what? A higher high. So this is how you mark it. This is how you mark it. You can see that everything here, I didn't bother marking any structure here because we are in a range. We are in a range. Okay, we are in a range, so I'm not going to mark it. Okay, don't worry. So let's go back to the main structure that we are looking at. This is a scenario we are actually looking at. You can see how I marked it, just high, low, lower high, lower low. This structure is the external structure that you are seeing. This 1, 2, 3 drive is the external structure, and within this external structure we have what? Internal structure. The internal structure is going to be this. Watch. Look at the internal structure here. Low, low, high, low, lower high, lower low, lower high, lower low. Okay? Let me make it green if it's going to make more sense, or blue even. Okay, please just try to pay attention. You can see that we have this major structure and we have this internal structure. Okay, now in this internal structure we have what we call a change of character. I don't know why it's like we don't understand change of character. This is a change of character. Once this lower high has been broken, we have what we call a change of character. Okay, change of character. Once we have a change of character, it's telling us that this intermediate or this internal structure downtrend might be over, so we can start looking for opportunity to buy. Okay, we buy after the pullback, okay, at the lowest price. And you can see, if you understand this, you could have captured a very nice trade somewhere. Sorry, let me toggle this off, it's disturbing me. Capture a very nice trade, something like this, and you know, something like that. A nice trade. This is how we trade. Okay, now the internal structure continues. This leg has another internal structure, which is 1, 2, 3 drive. Okay, this internal structure have 1, 2, 3, 4, 5. Then we have 1, 2, 3 drive. Okay, which is a correction. Then this leg also have internal structure, which to me is going to be 1, 2, and of course 3. Okay, it looks a bit kind of confusing. And now in this internal structure, you can also see that we have another internal structure. That is the market for you. You should be able to understand all these things. We have another internal structure. Okay, and here we also have another internal structure. Let's see the internal structure we're talking about. We have this, we have this, we have this. Okay, let me just delete it. Okay, so the only thing you are going to do, is to mark this high, low, lower high, lower low, and don't bother about these internal structures until you have improved in your trading. Okay, so let me delete these internal structures, including this change of character. Okay, deleted. Right, so we have this structure, this, let's say this high, this high is low, just to explain, something like this, and we have a break. Okay, and for all this time, price was not able, I mean this portion, for this portion, price was not able to break this low. Do you know what I'm going to do? I'm not going to label this low, label anything that is here. Okay, I'm going to wait until the break of this range, because this is a range now. Okay, this is a range. We are now trading in this range until the break of this range before you start thinking of market. When you have a break of this range, break of this low, that is when you have a lower low. Then you now look for the highest point here in this pullback. That's what you're going to call your lower high. Okay, then what is the expectational order flow after this? What is the expectational order flow after this? After we have this, okay, we expect price to do what? To retrace. We expect price to retrace. Okay, if price eventually retraces, that's what we'll be expecting. So going into next week, just go and look what price we do. We expect a retracement. Okay, then a continuation down if the downtrend is to continue. Okay, now let me just try to see if I can predict a scenario where price could most likely return from. Let me go to the daily time frame. I just want to see where price could most likely return from. Price could most likely return from this structure here. This structure. Don't bother about what I'm doing now. This is what I'm going to teach you. Okay, so where price will return from, most likely the highest point that price can go and return from. So this is a trade setup. This is a trade setup. I'm telling you the truth. It's a trade setup. If you go back to the 4 hour, okay. Okay, let's go back to the daily. The daily, we actually have this structure. Let's delete this. We actually have this structure. I'm just trying to choose the extreme. Yeah, we actually have this structure. So price is going to return from within this area. Okay, if you go back to the 4 hour, this is what we call scaling. If we scale it further, we have a situation like this. It's a very good opportunity, I'm telling you. So we hope that price will return. So going into next week, just check this. Just check this and you see what I'm telling you. Just mark it. Just mark what will happen. Going to next week, this is what I'm expecting. Price might just get into this zone and start coming down. Okay, so that's how we trade. We just wait for the opportunity here and try to capture the sell down. Okay, that's just the way we trade. So thank you so much.